Hello, good afternoon, Sandra. I'm doing fine. Are yourself?
I'm very good. It's such a pleasure. I've had the opportunity to have recently, in fact, also a conversation involving some of the interesting collaboration and use case you brought to market.
Yeah.
But today we want to do something very different, right?
Okay.
I really want to put the focus on you because you've been in the industry for quite a long time. I remember you mentioned the 90s.
Yeah, that's correct.
In a previous conversation.
Yeah.
So walk us through. I know you're the founder at Silverflow. So
Yeah.
what I really want to start with is understanding what your journey has been leading to building Silverflow, but also most importantly, how did you come about finding yourself in payments?
Yeah, I think that's an interesting topic. So I originally studied geophysics,
Do deals.
and geophysics is the physics of the Earth essentially. So gravity, Earth magnetic field, stuff like that. But the large component is physics. So I during my study I met another friend. He studied physics, and when I finished my study geophysics, he started to found his own company with his brother. And he said, "Well, why don't you come and have a look in my little company?" And at that moment, that company was not a payment company yet; it was a different type of company. But he said, "Okay, why don't you come to work here?" And I said, "Well, looks cool. Internet." I was a little bit more opportunistic at that moment. Fair is fair. Also, at that moment, within geophysics, I could not find my dream job.
Yeah.
So I initially thought, let's do this for half a year, see where it goes. The product that we had in mind didn't work, but we had a little payment module in that as well.
Okay.
So we had a few customers ask and say, well, we don't like to buy your first product, but can we just use your payment module? And that's essentially how we built out that company. And that company was named Bibbit.
That's the Bibbit.
Yeah,
Okay.
so that's Bibbit. It started off as a billing service. Well, probably we don't have enough time to go into details what we want to, but we did have this little payment engine connected. And yeah, at some stage, our customers were asking more for that payment product than for the billing product. So we decided to build out the payment stack. And that's essentially how I got involved in the payments. And to be fair, also the other ones, because yeah, with the group that we had at that moment, we started building the first payment company. And we were sort of the first at that moment. And our customers got bigger requests, asked for other payment methods in Europe. So a large part was around trying to implement as many alternative payment methods as possible. But another element was make sure that your card transactions would work functionally correct. And it was completely different in the early days than it would be today. Many funny stories, but one that I find quite funny is that we would take in the authorizations, but we couldn't do an online authorization.
Okay.
So we had to print out all the authorization requests in the evening. We had to fax it to our acquirer.
Okay.
In the morning, we would receive back the same fax with approved declined, etc. We had to manually key it over.
Cool.
Well, you sort of get it, but that works for a small number of transactions. It doesn't work for a large number of transactions. So we've been working from that moment on to improve on those operational processes when it comes to cards. And at the same time, look at all the alternative options that were also, we've seen so many different alternatives across the last 25, 26 years. So that was my first experience. After that, I joined the management team of Google here in the Benelux.
Okay.
And the reason was that they wanted to launch a payment product as well.
Okay.
And it was sort of competitor for PayPal at that moment. And PayPal was positioning themselves as a payment method.
Okay.
And the Google product wanted to position themselves as a real payment provider.
Okay.
But they were only supporting cards, not the Rabobank, Telebankier, and all the early online alternatives. So in all fairness, it was too American because cards, definitely early 2000 in Europe, online was so I spent most of my time actually working on evangelizing internet in general, particular to the retail market, of course, with a payment component as well in there. But then I wanted to move back in payments, essentially joined a company called Triple Deal, which we sold to DocData, rebranded to DocData Payments. I was the COO there, and also responsible for expanding the number of payment methods. I did that for a couple of years, and then my old buddies from Bibbit called me and said, "Hey, we've started something new. We are looking to go live pretty soon, so we need somebody to help us set up the operations teams, somebody to get the regulatory setup, the compliance setup, and somebody to head up the partnership with other payment providers." So yeah.
And that is Silverflow.
No, that is Argen.
Right. Okay.
Yeah.
So quite big names there then that you've been involved with.
Yes.
Across your career.
Yeah.
But then you decide to do Silverflow.
No, yeah, not yet. So at Argen, I think one of the things I did was to get the licenses for
Okay.
the acquire license for Argen. And once you get them, you didn't solve the technology. So I scanned and we scanned as a team to all the different providers that could potentially help us, and we couldn't find anyone. So I said, okay, why don't we build it ourselves? So we built in-house an acquire processing platform for Argen. Well, fast forward to Silverflow. When we started Silverflow, we were expecting that many payment service providers would take a similar route. So at the moment that you're big enough, you want to get your own license from the card networks.
Yeah.
You don't want to work under PayFac anymore, just your own licenses. And all of them, one way or another, need technology as well.
Correct.
So they could still work with the legacy providers that we looked at back in the days at Argen, and we're talking 2010. Well, they all still exist. They could, in theory, build it themselves, which is, of course, what Argen and Stripe and Checkout and a few others have done. But no matter how you put it, it's not easy. It takes a lot of time, few good developers, lots of money, etc. And to a degree, it's not your core, because your core is helping services on the merchant side. So we said, why isn't there a third choice of a very innovative payment processing platform to help particularly that group of customers? And that's what we've built.
Got you.
And yeah, that was, so the idea comes a little bit from my time at Argen, building it yourself, knowing how complex it is, saying, will other companies go through this process? Well, preferably they probably don't want to go through that process.
But that's the thing then, though, because, for me, in fact, when I started to understand the payment ecosystem, I really took an interest in the processing layers, because they are never represented. We don't talk about processing, right? You are completely hidden behind the scene, right? But then you saw an opportunity there, which was effectively completely undermined by the industry, right? In the sense of like seeing what does that actually bring to have state-of-the-art processing and the value that you're bringing in. What does that unlock then? Because you have only a few players still today into these spheres.
Well, there are a lot of different things that you can think of. So these systems, they have been most of the systems that are active today have been designed in the 80s, 90s, sort of that area. Some even go back further, 70s, literally. But most of them have their roots, the core of their system, the 80s, 90s. And of course they evaluated, but in most cases those payment processors evaluated by buying additional functionality, sometimes sort of similar platform in another country or a similar platform connected to a space. So if you look under the hood of those players, essentially you see a set of different generations of software with different functionality, and it's difficult to maintain. But also, back in the days in the 80s, what was your biggest worry? Well, keeping the cost down, as it is still today. But in those days, storage was very expensive. RAM memory was very expensive. Your CPUs, your processor was very expensive. Bandwidth itself was not really expensive, but it was a little bit more limited. But I don't think cost was the real factor there. But if you build a system back in the 80s, you store data as short as possible, as required, and only the data that is really relevant for you. And the same for at the moment that you're in real-time processing a transaction, you don't want to use too much RAM memory, and you don't want to have too much CPU cycles in order to keep speed and cost and whatever down. So these systems were designed with different hardware, and therefore, for today's standards, they're limited. And we said, okay, storage, I mean, we're not talking about HK, Ultra HD, movies, real-time streaming. We're talking still about payment messages, maybe with little set of extra data. So storage is not a problem anymore. RAM memory, same story. CPU time, same story. It doesn't cost anything anymore. So if you would design such a system today, you would sort of design it to use essentially all that additional hardware, and you can do more with data, both in terms of storage and post-processing analysis, but also in real time, because you can keep all the data in RAM memory. And that allows you for an enormous amount of different tools, functionalities, and services.
Okay, but let's talk then about that aspect, because data has really become a core currency into this ecosystem and a real driver. Because I know we talked about previously, for me, looking at payment from a very commoditized perspective, and what it seems is that the industry is now kind of like rising to data transparency and all of that. But what is it?
So we look at different processes. So on the one side, you have data during the authorization process, and then you're typically looking at how to improve conversion, for instance.
Correct.
But also look at data in real-time environment to reduce fraud, so filter out fraudulent transactions. What we do as well is, for instance, to tell you a lot about the card itself, what type of card it is in real time, And you could argue, what can you do with it? Well, maybe for the card art in your telephone or so. We do upfront cost prediction. So in authorization stage, what your scheme fee interchange will be. We can do upfront settlement time predictions so that you already know when you receive the money. And then you might argue, what's the use of it? Well, for many of those, you can use it to optimize other services. So particularly if you're talking about embedded financing, pre-finance, pre-funding, etc., you want to know as soon as possible what your cost will be and when you will receive the money yourself. So if you know that upfront at off stage, you can do your model on that and you can say, okay, listen, we try to keep the time between authorization and you receiving the money in your bank account as short as possible, because we know exactly when we will receive the money, how much it's going to cost, so we can optimize those. So that would be an element. Do we do that? No, our customers get the data. They can tune these systems to do so. This is in the off stage, but also in the later stage, think for instance of all the operational process. Think of your financial reconciliation, your chargeback, your dispute management. So that is not in the real time, but it's like when you actually have to work on it. There's a lot of data involved as well. And that's all the data elements you grab from your bank, you grab from the reports from the card networks, you grab from your own transactions levels, etc. And what you want is you want to present an as automated as possible reconciliation process to your customer. In our case, our customers are the acquirers, the banks. And why would we want to do that? Well, if they have fewer people required to do manual tasks in terms of reconciliation, that's an immediate saving. But quite often, if you look at the other systems that are there today, so the legacy systems, they don't even have these tools. They try to predict what you receive for your money, but they do it on the basis of the clearing file. And there are a few transactions that were in the clearing file, but they're not settled tomorrow, they're settled one day later. And that can happen because they're international transaction, because there was a bank holiday in Sweden, because the cutoff time in Singapore is slightly different than you expected, etc. So if you work with reconciliation purely based on what you get from the traditional systems, quite often every day you have sort of like an unallocated funds. And it can blend out over time, but from a financial perspective, it's not nice if every day you cannot allocate 0.5% of your funding.
And it's huge when
it's huge, yeah, exactly.
That materializes.
Exactly. So if you use a proper set of data and you can actually, first of all, allocate literally all of the funds that appear in your bank accounts with 100% accuracy, including scheme fee, settlement fee, FX fee, but also settlement delays because of anything happening anywhere in the world. And if you can automate it also to the banks, they don't need to have the people to do the manual reconciliation, and they also don't have the unexpected or unallocated funds left. So those are two financial savings, which are purely on the base of data. Well, I also mentioned, for instance, dispute and chargeback management. This is also to a degree a data game. So at the moment that you receive disputes, quite often the issuer expects that you deliver something to them to either confirm or disconfirm. And if you have more data, you can automate certain things, or you can make it much clearer to, in our case, the acquirer, and in their case, to the merchant. Say, okay, listen, this is the data that we need from you to effectively dispute this incoming disputes. So you're helping, you're using data systems to optimize other processes as well.
So why could an acquirer not build this? Because what I find fundamentally quite, interesting is that the acquirers, most of them don't actually own that capability, right? They outsource to the 70s, 80s, 90s software platforms, and you come in with this fundamentally changing, infrastructure that is now leveraging even the value that they service to the merchant. Because that means if they operate with this lack of visibility, what does that then tell you? That cascade back to them, the merchant, in terms of what data, what visibility, and the cost as well, because there's a bit of a guess, that they have to take if they don't actually have the components to be able to do their own calculation, right? So how difficult would it be then for an acquirer to just build that themselves, right?
Well, yeah, if you think that we're now in our 7th year, almost 7 years old.
Okay.
We're with 100 people.
100 people?
Yeah.
At Silverflow?
Yeah.
Oh, wow. Didn't realize that.
So you can sort of estimate the cost of building it yourself.
Yes.
And you could argue, can you do it with fewer people? Perhaps you get something working, but is it then at a competing level with the others? So there are a few banks who build it in-house. So it does happen, and some banks build it in-house 20 years ago, still run it. There are also still some banks who say, okay, we think it's part of our value, but you can more or less do sort of a calculation. It's not just building and then you don't need people to operate anymore. You also have to keep it compliant. You have these mandated updates. So you need to be able to carve out a group of developers for forever, essentially. Maybe you need more in building it, but you still need to have people for maintaining it. And it needs to be at a competing level, because if your platform is not competing with the platforms that are there today in the world of big payment service providers, for instance, because there are a few who have quite good systems, then as a bank, it's sort of, you need to invest roughly the same amount as these other companies are investing, because otherwise it's complex to build it yourself as a bank. And what of course we've seen over the last couple of decades, banks don't really build a lot of software themselves anymore.
Yeah, it's not their core value proposition either, right?
No,
so this is a very strong tech play.
Now, what we tell to our banks quite often is say, listen, bank, you are very good in all types of financial services. You know everything about the financial domain. That is your expertise, and you're trusted, you're reliable, you're regulated, you're well-funded, you're stable, but you also know a lot about very complex financial processes, transactions, etc. And you have the relation with other banks. What you're missing is technology.
Yes.
You don't have the best technology. So how can you become the best bank? Well, it's to combine your financial expertise in the broader sense with the best technology, and then you can really build a competing solution.
Yeah, that's right. And you had a very interesting use case recently with ING.
Yeah, for instance. Yeah,
which was precisely the technology
exactly
balancing with the trust and the infrastructure that they have.
Absolutely. But of course, this applies for ING, but in general, for many of the banks, the problem with banks is not so much that they don't have the financial know-how. The problem quite often is that they're limited by the technology that they have available.
Yes.
And at the moment, as a bank, when you realize that is actually limiting you from winning lots of customers, or that you actually might even lose customers, then you can have all the financial knowledge and know-how and people that you want, but just the customers are still running away.
Yes.
And where are they going to? To payment service providers of all kinds. And in most cases, these payment service providers know everything about payments, and in many cases they have good technology as well, but they don't know everything about complex banking structures and treasury and capital financing and stuff like that. So you still need to have the banks for that. And I think that is sort of where the banks could and maybe should leverage more on that. They say, okay, we're these powerhouses of financial banking knowledge, which includes and payments, but we don't have the best technology for the payments, and that's why we work with the best technology providers. But that's my opinion. I'm not a banker, but
no, you've got an opinion, and this is exactly
I do have an opinion.
What we like to bring in.
Yeah.
And so this is a very layered, aspect of the ecosystem. It's different components, different parties that act and play into that. So you've mentioned a lot that the industry anyway has some sort of infrastructure, right? Some of it being legacy, some of them now leveraging this hybrid model, some of them building in-house, right? So what's your view then? At what point does the legacy really needs to start stepping up and embracing, whether it's the rebuild, whether it's like the partnering with the hybrid? Because as of today, still banks that are fully still relying on those 70s software platforms that you mentioned.
So my view is that what you see, it's relatively easy. If you are a merchant and you work with any payment provider, whether it's a PSP or an acquirer or a bank or anybody else, these merchants, they see whether they like it or not. And what we've seen is that many people who build another payment company, before they built this payment company, were users. They were merchants, retailers or so. And it's okay, we can improve on this system. And there are different ideas. It could be on making it easier to connect with the payment service provider. I'm going to specialize in making it very easy. Or making a better interface for managing all the transactions, or having wider access to multiple payment methods, etc. So many of the payment service providers are created on the experience that these retailers have with what they see in daily life. But what you don't see in daily life is how is the actual stack of layers constructed. So they see the front end, and quite often they don't realize that behind this front end there can be a number of different layers. And how many layers? Well, we've seen constructions where there could be 6, 7, sometimes 8 different layers, and sometimes each of those layers also has their own risk management module connected to it. And in my view, if you add a layer on top of a stack of other layers, then you can make certain things better, for sure. But but your patching and the quality of the total stack is determined by the sum of all those different layers individually. But if there's one layer that is not good, yeah, then you can sort of mask it a little bit and making a little bit look nicer and making it easier, making the APIs, the interface easier, etc. But if the functionality is not good enough, and then you need to tackle that particular layer.
Sure.
But as we discussed before, that is, well, for what we do, it's the lowest layer in the stack. So it's quite hidden underneath all these other layers, and it takes a while before you sort of get to the bottom of understanding that.
And so do you feel that it's kind of a case where we need to see more collapsing of those layers, because there's way too much? To a certain extent, we went from an all-in-one approach with the infrastructure to now a specialized, approach where we've got everything going on. There's so much specialization that you can plug in to make something work. And what you're saying is that then you've got all of these different components. You can patch to improve your technology, but then you've got like this huge kind of difficult to manage and to own and keep on top of. So is it the case then in your view that this need to be start stripping, collapsing, and sort of streamlining for operational efficiency?
Yeah, well, what I typically say is that every layer that is between, let's say, the place where the consumer and the retailer make their transactions, and typically consumer gives their card details, one form or the other, to the retailer. The retailer either has a card present or an interface, etc. And then it moves to a lot of layers before it actually hits the card networks. And every layer between, first of all, makes a half a cent here or a base point there and a fraction of money. So every layer costs money because they don't do it for nothing. Every layer also acts as a filter. You send in 1,000 transactions, and at every layer, maybe one transaction, I don't know how many, but you expect 1,000 transactions to be sent to Visa and MasterCard. Well, in reality, not 1,000 transactions are sent to Visa and MasterCard, because somewhere in this stack of layers, transaction gets filtered out. And it could be because of risk. Well, you could argue why everybody needs to look at risk. It could be because of bugs or temporary glitches, timeouts, stuff like that. It could be downtime, etc. But you can measure that. Yeah. As a retailer, I'm sending 1,000 into this stack of layers. How many are actually passed on to the card networks? Then on the way back, you get information from the card networks. It goes through the same 7 layers again. But there's information that you get directly from the card networks. And every layer, sort of needs to pass on that information. Well, you can imagine if the lowest layer of that stack is not a data system and doesn't pass on all the information, the other layers who've built on top of that, they simply are not aware that that information even is there, let alone the merchant. They're just not aware. So that's why what we see is that instead of putting another layer on top, another layer to make things easier and prettier, you're sort of ignoring the problem, which is the lowest layer in the stack. So that's what we're tackling. What we see for the biggest retailers, so that is something different from, let's say, the small, medium, but the biggest retailers that particular day, they want to understand what's happening.
Yes.
So quite often they have an enormous amount of payment knowledge in-house. Quite often they've decided to not go for this one-stop shop fits all, because they want to have their own risk module. If you're in taxi ride hailing, you have a specific type of customers with a particular type of behavior where you can filter out potentially fraudulent behavior or unusual behavior, let's put it that, which is different than if you run an online gaming platform. And you could argue if you can even make one risk system that is good at both.
That's right.
Because there are different profiles. So if you're a top-end gaming platform, you build your risk system and you try to spot patterns, and you always have the good thing and say, if it's too much fraud, I just close your account, and you see how quickly the true gamers will pay. And the same with the taxi drivers. Yeah, if somebody can't get a taxi, you see how quickly they move. So they have different tools.
That's right.
And that's why quite often we see that, for instance, they want to have their own risk system. They don't want to share their data with a more generic risk system. But we also see that they move up a little bit in the payment stack itself. So quite often they make some integrations themselves to alternative payment methods if they're big enough. They don't need the gateway of their service provider. They don't need the risk module of their service provider. Quite often they have a reconciliation team anyhow. So yeah, they're not too afraid to take on the raw data. They want to reconcile. They want to get the money as quick as possible. So many of those things, they are in-source. So when it comes to cards, you could argue, what do they want? Well, a direct pipe into the card networks with as few layers as possible. Okay. And of course, they want to have a good commercial contract with their own selected acquirer, which could be, in theory, their home bank if they have a good relation. It could be any of them. So again, you're combining sort of the best technology, which would be us, with their own choice of acquiring, which is one of those banks, for instance, or another acquirer. But we see that the bigger those retailers get, the more that they're looking into this
Ownership
different
control.
ownership control and try to glue the different modules together.
Yeah. Last year, I think in here you announced the direct processing that
Yeah,
was Bolt, right?
Exactly. Yeah.
I do remember that was
Yeah.
also very interesting
Yeah,
use case
exactly.
bypassing some of the layer and straight access into
Yeah.
the scheme.
And this is exactly the idea for Bolt, for instance. Yeah, they operate across the globe. They don't want to deal with a lot of different technology across the globe.
Yeah.
Because they can work with a European acquirer. Well, they might be on any of the European platforms. And if they work with in Southeast Asia, yeah, they work with the local acquirer there, but they might be on a different processing platform. And what does it mean for them? Well, a different type of integration, but also different maintenance, different functionality quite often, different reconciliation. So they're essentially duplicating the work. It's two different layers. If they would run on the same technology, they would have the same implementation, same functionality, etc. And they can still negotiate their own commercials with their banks because we put the bank's licenses on that technology.
Really interesting use case there.
Yeah.
Now let's switch gear and look at a different perspective, because I know you've now got a bit of a headway with the US. You've had an operation for a while there.
Yeah.
And how's things going then in this market? What are you seeing different than what we see
Well,
here?
I think the biggest difference for us is the regulatory framework there. So in Europe, of course, we have the PSD for quite a while already, and PSD2, PSD3. But that essentially allows payment companies, and I'm particularly looking at not at the banks, because the banks have a banking license. But if you're a payment service provider, but there are many other types of companies, you can get an e-money license or a PSD license, a PI license, and that allows you to become an acquirer. So in Europe, we see new acquirers essentially every year.
Really?
Yeah.
Oh, really?
Yeah.
Oh, interesting.
And similar regulation is, in all fairness, in many countries across the globe. So that it's possible, if you're not a bank, also to get this sort of financial regulation that you can become an acquirer. So what's the difference with the US? They don't have this license regime. So in the US, you have to be a bank and a federal bank
to be an acquirer.
To be an
It's
acquirer.
a bank-owned typical model.
Exactly. So in the US, typically, whoever does this are banks. And there are not that many new banks every year.
Yes, I can totally get that.
So there are not that many new acquirers either. It happens very rarely that there's a new acquirer, but not as much as you would see in Europe. So that makes our go-to-market different. Because the new acquirers, the payment service providers, typically are quite on the innovative side, taking a bit of risk, a bit quicker, very tech-focused, etc. So in Europe, we were able to prove our case with initially a few of these payment service providers who were sort of prepared to take that risk, that jump, etc. And it worked out. And then we could go to the banks because we could demonstrate. We had a number of other customers who were using this. They were happy customers. We could make references and business cases, and that's how we got into the banks. In the US, our first customer has to be a bank.
Interesting.
And banks typically are conservative. So in the US, our story is more, listen, we already work with all type of payment companies, including banks in many countries across the globe. So yes, the US is a different market, but we already work with banks. Don't be afraid that you're a bank. So that's a slightly different story, but still, of course, it takes a little while to get over the fear of the banks.
But you've got that momentum going now, because you scale quite drastically. When I looked at your figures recently, like 180 million to, what is the number now? The processing that you're doing quite.
We moved from 0 transactions to over 1 billion transactions annualized in under 3 years.
Amazing. So that's
just a big growth. But I have to be fair there. The portion of the US in that number is still relatively small.
Okay.
So we do expect a similar type of growth. We are alive there, but on the billion, it's a relatively small percentage. But we do expect also that, particularly in the US, we can also accelerate that growth to those type of numbers over the course of the next couple of years.
But you're on the journey, and you are multiple founder exited operations, so you actually know the principle and the reality behind having a great proposition to actually getting it working and then scaling, right? And that's very different from markets to markets.
Yeah, absolutely. Yeah, and the US is, because of only banks, it takes more time, essentially.
Okay. And how about the schemes then, in terms of, so right now here in Europe, you integrated with the major schemes, like the card networks. And, we know that you now have your technology enabling and giving that direct access. So how is the US then in comparison to that, the work that you're doing in connecting with the schemes?
Well, One of the biggest differences is around the interchange and scheme fees in the different regions. So there are a few differences, but they're not necessarily related to the US. In some markets, single messaging or dual messages, and sometimes particular cards require single messaging, where others require dual messaging. But once you've built both of them, yeah, you can sort of get around in most of the countries because we can switch which country we need what functionality. So yeah, in the US, Discover is more important than in Europe, so we support Discover as well, of course. American Express a bit more important.
Yes.
So how we look a little bit at the world when it comes to schemes, there are a number of schemes that essentially are everywhere across the globe. So Visa, MasterCard, American Express, Diners, Discover, JCB, Union Pay. Although of course Union Pay and JCB have a little bit more Asia focus and Discover a bit, and we have pure domestic ones. So think in Europe of bank contact Mr. Cash, but also card bancaire or Girocard, those type of payment methods. And of course, it's in our ambition to, and we're pretty far on the way to have all those global schemes. So in essence, we can do all the global ones everywhere across the globe. And in our core market, or if we have specific business cases, we will also build some of those domestics.
Yes, yeah.
But we typically remain focused on the card space and not so much on the alternative.
So you still believe in card? You're probably one of the few that still has that much, probably, backing behind the card, because the whole industry are continuously challenging the status of cards, talking about the death of cards, bringing new alternatives. So what's your thoughts there?
Well, my thoughts is that's not new.
Yes, that's true.
So I've been in the business since '98, and as long as I've been in payments business, there was always the new payment method that would change the world, and they would always take market share from the cards typically, and it would always be the European killer. And of course, we've seen a few very big ones. So particularly in Asia, if you look at, for instance, WeChat Pay, or in Brazil, if you look at Pix, did they really replace cards? Well, my opinion in Pix is that a relatively small part of the Brazilian population actually had or was actively using cards.
Correct.
Most of them were using pagamento boleto, which was a crime to use. Then, Pix was introduced, and it didn't necessarily steal that much from cards because cards was already quick, but it's sort of, it demolished pagamento boleto. That doesn't exist anymore practically. And as a result, because it was way much easier than pagamento boleto, people started using it way more. So you have a new payment method which is growing tremendously because there was a gap in the market. There was something missing. Pagamento boleto was used, it was not user-friendly, people hated it, it was slow, it was expensive, etc. So there was need for innovation. But if you look at another region of the world, if you look at, most of Europe, I would say, there is not an enormous gap that needs to be fulfilled. People in general across Europe, they can pay the way they want to. We have a number of alternatives, we have cards, etc. But I don't think that in any of the markets you could say, well, the market doesn't function. There are too many people who cannot make a payment. So then if you want to introduce something new, you're competing with what is already there. If you're introducing something new in Brazil, you're competing with what was there. What was there was bad. In Europe, in most countries, it's not bad. I mean, there are improvements for sure, but it's not bad. So if you're introducing something new, you have to compete with something that is already quite okay, and people are used to it. And that's difficult to introduce something which is going to be a card killer.
And it's always like this one thing around the product that may be like the right use case, the right UX. Yep. And then you've got in between the enabler, which are the merchants, and then you've got the consumer that also need to be buy-in. So all of those three are separate bucket, different strategy, and it does take quite some work to get the adoption and starting to see.
Absolutely, and that's what you see with many of the new payment methods that are being introduced or have been introduced. I sort of like Satispay because in Italy they got quite a lot of traction in a reasonably short time frame. So that works pretty well. They want to expand to Europe. I think that is a little bit more complex for them.
Yes.
So there you see that something could work domestically pretty well. You can actually get a lot of traction there, where expansion is actually another thing.
Correct.
If you look at buy now, pay later in general, is this really a new payment method? I could dispute and say, no, buy now, pay later was already there when you get your home catalog, your catalog sales.
Absolutely.
And it's more risk management of how will people pay back. But the actual payment, is still can be a bank transfer or account to account or a card transaction. So it's not really a new payment method in that sense, in my view. And the same with, for instance, like Wero. Yeah, it's hopefully will be a big success.
It is already.
It is already. Yeah, exactly. But you need to change the behavior of people,
Correct.
and that is the challenge. How do you introduce it? In the Netherlands, it's automatically because ideals rolled over.
Yeah, yeah.
In other countries, you have to demonstrate why people would move over. So
That's right.
it's interesting to see how that will evolve. Will it be the card killer? I don't know.
But
I
does
don't
it
know.
need to be? That's the other
No.
question. Exactly that.
I don't think it needs to be, and it has a different role. It has a different role, and I think at the same time that if new payment methods introduced, usually you see the payment markets grow as a result of that.
Correct.
So it's not necessarily eating in each other.
So with everything that you've seen, because you've been through the waves of what's happening in this infrastructure and industry, what do you know today that you didn't know that could have made a difference in the way you had approached Silverflow, despite the success that you are today?
Yeah.
But clearly, we're still learning. Things are shifting in different directions that are not necessarily expected, right? So what do you know today that you wish you potentially would have already gained, that level of understanding that could have accelerated maybe quicker your route to the US or what you're doing here next?
Yeah, this is a very good question. I think if you compare it to let's say the early days of my payment career, so late 90s, early 2000s, regulation practically was not even a discussion point because it didn't exist. We thought we were unregulated. At the same time, yeah.
You thought you were unregulated.
Well, we were de facto unregulated.
Really?
Or at least it was in the gray zone whether even which regulation would apply to us. And the banks didn't know, we didn't know. So you sign your contract, etc. So that's changed. I think regulation has brought a lot of things good. So I know many people are always complaining about regulation.
Right.
No, I think regulation gives a fantastic framework. So if anything would have been changed, it's get a good set of regulation. On the other side, you see that too strict regulation, you can always compare to no regulation in the US at this moment. There is no regulation for payments innovation. That means that companies are not innovating there. I think you need to find the balance between allowing a certain degree of freedom for these new innovative payment companies, and at the same time to make sure that those payment companies, maybe if they're very small, they cannot do too much harm, but that the level of regulation and control is in line with how they grow. Is that an answer to your question? We've designed Silverflow to be, we don't have the requirement to be regulated. We don't touch the money. We don't onboard customers. Our customers are acquirers, so they themselves are by definition regulated by their local central bank, and they are supervised and member of Visa, MasterCard. So we can sort of back up and say, okay, there are other institutes, Visa, MasterCard, central bank, who already done, and I think that is one of the biggest learnings for me now. If you want to scale fast across the globe, don't move into a regulated business because it will slow down.
I like that, and I think you definitely got a point. But interestingly, we also see how much you get acceleration when you have the banking of the government, right? Pix is a good story. The Indians have got a good story. And so we can see that balance also work and actually really get things, much quicker off the ground.
Yeah, that could be, but this is, Well,
I like the touch, yeah.
I think for Wero, of course, if you look at that particular bank, yes, it's organized by the banks. But they've been working on it for quite a while, all the different elements around it. So it's not that it's a quick thing.
Yeah, it is never. It's never
a quick thing. So that is one, and I think that also but this is not so much my learning, but more many of the people that I work with today at Silverflow. All of the people are great people. Let me start with that. Okay. But we also have quite a few people that I've worked with for almost 25 years.
Okay.
So they worked with me at Bibit,
across
at WorldPay.
Yes.
They moved with me to Argen. They moved with me to, not with me. We sort of, but you're still. So it's more than just a colleague that you work with at a temporary job.
That's right.
It's almost a group of maybe friends, but definitely very respected colleagues that you work with, where you know how they work, you know the quality of the work. You only need a few words to get things done. You know when things are going wrong, how to approach with them. And I think that is really helping as well if you work with people for a long time.
That's right. It's a bit of a fintech mafia. You know,
Yeah.
there is
Yeah,
the
yeah, yeah.
PayPal mafia, right?
yeah,
Where
yeah,
you
yeah.
see what they gone on and what they did individually.
Yeah,
So
yeah,
you've got
yeah,
your own mafia going.
Yeah, no, absolutely. We actually have an app group called the Agent Mafia as well, and we still see some of the Beat It people as well, and it's fun. Yeah.
That's amazing. So what's next then? I mean, what is potentially in the roadmap or things that you're probably exciting coming? So
Yeah, so we, well, what I mentioned, we invest on additional schemes, but this is sort of in the line. We, at this moment, invest a lot in card present, so point of sale, additional functionality.
Okay.
So there are certain things that are different for point of sale. Think of the software on the terminals itself, the way how terminals are being managed for large retailers, etc. So we want to make that different. Of course, we put a lot of effort in growing the US. We see that as a potential very big market, also because the systems are very. Those are the things that are sort of expected. Well, what today we also do is we spend quite a lot of time in what can we do with AI. Of course, everybody talks about it here. We do several things with it. One of it, how does it help us to develop our software quicker? And we've come to a stage where we're really pretty good at that. So we have more output now with the use of AI, and it's like considerably larger than what we had without AI. So we load all the documentation of the card networks, the updates, etc. in our AI. It already predicts almost the code that we need to write. But the same for our commercial processes, how to respond to RFPs, etc. So we continue to invest as well in improving all our internal processes by using AI. Usually small steps at a time, but if you combine and add all the small steps, it can make big differences at the end.
I mean, in the space of maybe a couple of years, we're really seeing AI going beyond the ChatGPT, just asking questions, to really fundamentally changing the way you can operate and sort of take the business to more efficiency, right?
Yeah, exactly.
So very exciting.
And of course, there's a lot of talk about agentic commerce, about stablecoins, etc. To a degree, stablecoins for us is another currency. So,
but I think it also have to be, because in the sense of we need to go beyond the labeling, because the labeling doesn't actually matter really. At the end of the day, is that what is it that it's opening or unlocking, because the consumer, they're not going to talk in those terms, right? And so to your point, that's what it has to be. It has to be seen and feeding and blending in a way that it's that mainstream that it is actually effectively a different form of currency that transacts.
Exactly. So that has also very limited impact. There are a few things that we need to change. If somebody wants to receive settlement in whatever stablecoin, it's slightly different settings in our system, different flags, but that's not, like, for us, it's not a big thing. Let's put it that way. For agentic commerce, slightly different. I mean, we hear the promise everywhere. In my mind, it's a big puzzle, and some technical parts have been solved. Other technical parts will be solved. I'm convinced of that. But it's not just the technical parts that is the problem. There are also liability, legal, compliance.
Absolutely.
And I think that's in most cases, if I hear people at this conference, but at the other conference talk about agentic commerce, it's around what is technically possible. But that is a slightly different story than if you take a deep dive in what is compliance-wise, regulatory, legally possible. And probably a lot of things are possible, but it's not cleared out how exactly they will work. So at the same time, we have to be prepared for that. So also there we spend, but then it would be other companies connecting to us for their agentic commerce questions, and that we're just compliant for the part that we have to do.
That's definitely the next big thing. I mean, we see here a lot of talk around that alongside the stable coins. So let's definitely follow the conversation, because whichever way it goes, we are on for an exciting next week.
Absolutely.
Coming, and I look forward to still seeing you on the scenery, and I hope you have no regret about how you landed here and you staying in payments, because you were not planning to have such a long journey. But we are certainly appreciative of having people like you and across industries, seeing how you've seen the changes and what you are bringing by yourself, taking the step and joining the team that you have around and building something that drastically is making a difference and adding value. So well,
It's nice. Yeah.
It's a pleasure.
I think it's very exciting to be in this
It
business.
is.
It is very dynamic and things change every couple of years and there's a
It
new
is.
hype. So
It is.
it's a fun place to be in.
Thank you so much, Robert. It's been a pleasure.
Thank you, Sandra.
Thank you.